Tax season may not always bring a tax refund. Sometimes it brings a tax bill. From payroll deductions that fall short to tax return error codes, there are many reasons why people owe the IRS. We'll explain why it happens, how to check your balance, and how to resolve the issue before tax time turns into trouble. Wondering why you owe the IRS this year? It often comes down to changes in life circumstances, income, or the tax code itself. Significant life changes such as marriage, divorce, disability, or having a child can affect your filing status and the deductions you qualify for. For example, if a child no longer qualifies for the child tax credit, you could lose a significant deduction and owe more. Changes in income and withholding are another big reason. If you incorrectly adjust or don't adjust your IRS Form W-4 after a raise or job change, your employer might not withhold enough from your paycheck. This leads to underpayment throughout the year and a surprise bill in April. Also, if you received unemployment benefits, only 10% is withheld by default, leaving many taxpayers with additional taxes they didn't expect. Earning extra income, whether from freelance gigs, side hustles, or contract work, can increase your self-employment income. With that increase comes the need to pay quarterly taxes that you may not have planned for. Failing to make those payments throughout the year means owing more upon filing. Income from sources such as pensions or IRAs can also increase your retirement income and raise your tax liability, especially if not enough tax was withheld. Changes in deductions and credits matter too. Perhaps you no longer qualify for the Earned Income Tax Credit, or maybe you claimed incorrect deductions. Changes in the standard deduction or IRS thresholds from one year to the next can also impact how much you owe. Are you selling investments? If you earned profits from stocks, real estate, or crypto, you may owe capital gains taxes. Unless you had capital losses to offset those gains, you could face a larger tax bill. Expired tax relief provisions, like those passed during the pandemic, can also catch people off guard. To avoid surprises, it's important to stay up to date with tax legislation. Ultimately, anytime your life changes, your taxes will probably change too. Don't assume your withholding is accurate. Review your situation each year. Update your W-4 and use the correct forms to reflect your new financial situation. This ensures that you're reporting the right income and deductions. The clearest sign that you owe the IRS is receiving a bill or notice in the mail. These notices often escalate over time and may include warnings such as intent to levy, which is a clear signal that the IRS is preparing collection activities. However, you don't have to wait for a letter. You can contact the IRS directly by phone or visit a local IRS office to clarify your tax situation. You can also request an account transcript online, by mail using Form 4506T, or through the IRS2Go mobile app. These transcripts outline your payment history and any balance you may owe. To get the most comprehensive view, set up an online account at irs.gov. There, you can review your balance, see recent payments, and monitor any new penalties over time. If you're self-employed or receive income not subject to withholding, you're expected to make quarterly payments to avoid surprises at tax time. Skipping these can result in penalties that grow quickly. Remember, late filing penalties are often 10 times higher than late payment penalties. In fact, failure to file can cost you 5% of the unpaid tax per month, up to 25%. When both late filing and payment penalties apply, the total is capped at 5% per month. Failing to pay your balance not only adds up in fees, it can also trigger wage garnishment, liens, and even criminal charges if the IRS determines that you have intentionally avoided payment. If you're struggling, don't ignore it. There are ways to set up payment periods and avoid more serious consequences. Owing the IRS isn't the end of the road. There are manageable ways to resolve your balance. If you are able to pay the full amount quickly, making a lump sum payment within 120 days of the tax deadline can help you avoid fees associated with setting up a payment plan. You can contact the IRS directly to arrange this. But if paying in full isn't an option, the IRS offers several payment arrangements. One of the most common is an installment agreement, which allows you to pay what you owe over time. However, interest and penalties will still apply until the balance is cleared. For balances under $50,000, you can set up a long-term payment plan using the IRS's online payment agreement application. This option is more flexible and doesn't require immediate full payment. To ensure your payments are secure and recorded promptly, Make sure to use IRS-approved payment processors or set up electronic payment options directly through the IRS website. If you're self-employed or have a variable income, staying ahead of what you owe with quarterly tax payments is critical. These proactive steps help prevent future surprises and reduce potential penalties. And in certain situations, such as hardship or natural disasters, you may qualify for penalty relief, so it's worth looking into those options if you're struggling to pay. Owing taxes doesn't have to be overwhelming. The key is acting early by using tax preparation software or seeking help from a tax professional to understand why you owe and how to check your balance and set up payment options. For personalized advice from tax professionals and help resolving IRS issues, contact Community Tax today to maximize your refund. Don't forget to check out our latest video on back taxes to know more about their potential consequences. We hope this video has been helpful. Make sure to subscribe to our channel as we continue to delve deeper into important tax-related subjects.